If you've ever said you want to start trading Forex, but you don't know where to begin, then this video is for you. I will try as much as possible to keep this video very short, so you would have to pay rapid attention because I would be going straight to the point. But before we get started, kindly subscribe to this channel if you have not, and turn on your bell notification so you will be the first to be notified whenever I upload a new video. Now, a quick overview of what we shall be going through in this video. First, we shall be looking at Forex. Number 2, Forex trading. Number 3, list of those engaged in Forex trading. Number 4, we shall be looking at the following terminologies, okay? Currency pair, pips, lot size, leverage, margin, spread, order type. Number 5, tools used in Forex trading. Number 6, 4 sets of trading section. Now, in this particular section of the video, these are the topics which we will be covering. Okay, so let's get started. What is Forex? Forex is an abbreviation for foreign exchange, which is a global market where the world's currency are traded against one another at an agreed rate. Professionally, Forex trading is simply predicting whether one currency will rise or fall in value compared to another. If you are right, you make money, but if you are wrong, you lose money. Here, you are not buying the actual currency, but you are simply trading their price movement on a chart using your broker's platform. Okay, so number 3, list of those engaged in Forex trading. If you've ever traveled from one country to another, then you've traded Forex. If you had any reason to change your local currency to another, that is Forex trading. Forex trading is a legal and legitimate way of making money, and it's also a career path for millions of people. Now, the list of those engaged in Forex trading, the list are: 1, we have the central banks of various countries, governments, commercial banks, financial institutions, hedge funds, retail traders, proprietary trading firms, which are prop firms. Forex is the second most flexible market behind cryptocurrency. It is the largest traded market with over 8 trillion daily transactions. In Forex trading, the size of your profit depends on your lot size, pips movements, and leverage. Now, all this I will cover in the later part of the video, so just stay tuned, make sure you are subscribed, and sit tight. Let me walk you through all the steps, okay? What is being traded in the Forex market is currency pair. Basically, they are paired into two. We have the base and the quote currency. The first is the base currency, while the second one is the quote currency. For instance, now we are having USD JPY, okay? So the first one, which is the USD, is the base, while JPY is the quote. Now, in a pair, the first 2 letters represents the country's name, while the third is their currency. For instance, now you have USD, which stands for United States. The last D stands for dollar. While JPY, which is the quote currency, JP stands for Japanese, while the Y stands for yen, okay, which is their currency. The forex market always open 24 hours in a day and 5 days in a week. Now, unlike the cryptocurrency market where it operates 24 hours a day, 7 days in a week, now the forex operates 5 days in a week and it opens 24 hours in a day. Okay, so next, tools you would need in order to trade in the forex market are: you need a smartphone. Number 2, a forex broker. Number 3, trading view, where you use for your chart analysis. And number 4, you need a MetaTrader 5. Okay, those are the 4 tools you need to trade in this forex market. Okay, now we have 4 sets of trading section. 1, we have the London section. Number 2, we have the New York section. Number 3, the Tokyo section. And number 4, Sydney section, making the 4 different types of section that runs every day. Okay, and they equally have their traded hours. Key forex terminologies. Number 1, we have currency pair. In forex market, currency pair are grouped into 3 main types based on their liquidity, trading volume, and the economic which they represent. Now, the first of it, we have the major pair. Second, we have the minor pair. And third, we have the exotic pair. Now, let's go to the major pair. The major pair. These are the most traded pair in the world. They are always include the US dollar and one other major economic currency. For instance, we have 7 of them, which are from number 1, we have Euro USD, USD JPY, GBP USD, GBP CHF, UAD USD, USD CAD, and NZD USD. Next, we have the minor pair. This pair do not include the USD but involve major currencies like Euro, GBP, JPY. E.g., for instance, we have Euro JPY, Euro GBP, GBP JPY, AUD NZD, CHF JPY. Okay, now for the last one, we have exotic pair. Now for the exotic pair, this involves one major currency and one currency from an emerging or smaller economy. For instance, we have the USD TRY. Now TRY stands for Turkish Lira. Okay. We also have USD ZAR, that is US dollar / South African rand. Okay. Now, next, what is PIP? PIP simply means percentage in points or price interest point. It is the smallest price movement that a currency pair can make based on market condition. Now, for currencies that has 4 decimal place, each movement of the 4th decimal place is called a pip. Okay. Now, for instance, now as you are seeing this display screen, you have some currencies that have 4 decimal place like the USD CHF. Okay. Now, this what we are having there is 0.8046. The last movement, that 6 that you are seeing now, if it changes to 8, that is pip movement. It simply means that it has moved twice, as in from 0.8046 to 0.8048, meaning that we've had 2 pip movement. Okay, so that's what pip is all about. Now, the monetary value of each pip depends on the currency pair, the lot size, the base currency of your account. Now, just a quick one. In pip calculation, there are some that has 4 decimal place. Like for instance, we have this. It has 4 decimal place. We equally have the ones that have just 2 decimal place, like the Euro JPY. Okay, Euro JPY. Now, the last digit, for instance, if you are looking at this Euro JPY, which is 175.71, if the last digit, which is 1, moves up to 3, for instance, which means we've had 2 pip movement. If it moves down by 5, means we've had 5 pip movement downside. Okay, same thing with this USD and CNH that has 4 decimal place. That is, after the point, we have 4 other figures that makes it 4 decimal place, and the first one 2 decimal place, so it can come in both ways. Okay. Okay, now so let's talk about lot size. Lot size, it simply refers to the amount you are trading with, and this always determines how much each pip movement is worth, and it will directly impact your profit, your loss, and also your risks. Okay. Okay, now so we have 4 types of lot size, but In Forex, we mainly make use of those three, which is the standard, the mini, and the micro. But other trading this thing, they normally use the last one, which is nano, okay, like synthetic, for instance. Now, for Forex, we have three major ones, which is the standard, the mini, and the micro. Now, if you are taking a standard lot size, your lot size will be 1.0, which means for every pip movement, when the last fourth digit move by one, it simply means if it moves up, you are getting $10 per each of those pip movement. If it goes down by 3, means you are also losing $10 per each of those pip movement, which means you've lost $30. Now for the next one, we have the mini lots. So for each pip movement, either up or down, simply means you are losing $1 per each of them, because the lot size is 0.1 and the value is each of them is $1 per each of those movements. Now for the last, which is a micro lot size, the lot size is 0.01, which means for each movement of the last digit, you are losing $0.1 per each of those movements. Now, these are the main three which are used for Forex trading, okay? Okay, so the next thing we'll talk about now is leverage. Now, leverage, this simply allows you to trade with more money than you have. Leverage allows you to trade with more money than what you have, okay? So next we have margin. Margin is the amount of money that a trader needs to deposit in order to open and maintain a larger position, okay? Okay, next, so let's talk about spread. Spread is the difference between the bid price and the ask price of a currency pair. Bid price, the price at which the broker is willing to buy a currency pair from you, okay? While the ask price is the price at which a broker is willing to sell a currency to you. Now, the difference between the ask and the bid is what is called the spread, okay? Now, the spread is essentially the broker's fee for facilitating the trades. Now, for the last one, which we have is order types. Now, we have these various sets of order types, which is from market execution to sell stop limit. Okay, so we have market execution, buy limit, sell limit, buy stop, sell stop, buy stop limit, and sell stop limit. Now, these are all various order type which you can use for you to place your order either to sell or to buy. Now, buy limit simply means you want to buy when the price gets to a particular limit. Sell limit also, you want to sell when the price gets to a particular limit. But personally, I make use of market execution because sometimes you're not being fast enough or being able to time this market. So it's better you go with market execution, which means when you click buy, for instance, it buys for you immediately. And when you take sell, for instance, it will sell for you immediately at the best available market price, okay? Now we've been able to touch the basic aspect of Forex trading. These are just the elementary parts. There are more in-depth part of it, which you also need to know. So subscribe to this channel, turn on your bell notification so that when I upload the next video, you'll be the first to be notified. We have other areas like the technical analysis, which I'll be touching on later on. We have the fundamental analysis. We have topics on trading strategy. We have trading psychology, risk and money management, and how to raise your trading capital. Now, I will be touching on each and every one of these particular topics. So make sure you are subscribed to this channel and turn on your bell notification so that when I drop this next video, you will be the first to be notified. Please kindly subscribe to this channel. Turn on your bell notification and also like and share this video. Now till I come your way again, remain blessed, shalom, and see you in the next video.